Welcome to The Explainer. Today, we are breaking down what is arguably the single most important event for the global economy this quarter, NVIDIA's earnings report.
Take a look at this number, $650 billion. That is the staggering amount big tech is on track to pour into AI infrastructure in 2026 alone. To put that in perspective, that's more than the GDP of many countries, all going into data centers, chips, and power.
And all that spending brings us to the one question that has the market completely terrified. Are we witnessing the start of the greatest technological revolution in history, or are we watching the mother of all capital expenditure bubbles get ready to pop? Well, on February 25th, we're going to get our first real clue. Okay, let's dive right in.
So, NVIDIA's Q4 earnings report. This isn't just another stock update. You got to think of it as the ultimate gut check for this entire spending spree. It's the moment we find out if this AI arms race is still accelerating or if it's about to hit a brick wall.
Now just look at the scale of these numbers. Wall Street is expecting an absolute monster of a quarter. We're talking revenue around $65.5 billion and earnings jumping over 70% from last year. I mean, these are phenomenal figures. But here's the thing. In a market that moves this fast, this backward-looking data, it's not what's going to move the stock. The real story is all about what happens next.
The real truth, what everyone is searching for, lies in something called demand durability. Basically, can this incredible growth keep going? And NVIDIA CEO Jensen Huang has set an unbelievably high bar with comments like this one, calling demand for the new Blackwell chips insane. He's pretty much promised the market that this explosion in orders is going to continue.
And that demand is, well, it's changing. It's not just about buying individual chips anymore. The biggest tech companies in the world, the hyperscalers like Amazon, Google, and Microsoft, they're now buying the whole integrated system. They're not just customers anymore. They're co-designing the entire digital factory of the future right alongside NVIDIA.
And this slide right here, it illustrates that trend perfectly. Just look at the journey Meta has had with NVIDIA. It started back in 2022, with a big order of GPUs. But fast forward to today, and it is a deep, multi-billion-dollar partnership to co-design everything from the ground up. Meta has literally evolved from just being a customer into a core strategic partner.
So what this really is a shift from just acquiring GPUs to what we call a full-stack integration strategy. They're buying not just NVIDIA's best-in-class GPUs, but also their CPUs and their super-fast networking gear, all to create a perfectly optimized system for what Mark Zuckerberg is calling personal superintelligence.
But this spending isn't just happening in Silicon Valley. A totally new kind of global customer has shown up. We're talking about entire countries. It's a concept called sovereign AI, and it is creating a whole new layer of demand.
I mean, check this out. Nations like Saudi Arabia, India, the UAE, and the UK are now buying what they're calling AI factories directly from NVIDIA. They see having their own AI capability as essential national infrastructure, just like having electricity or the internet. And they're pouring billions into building it out.
But with all this unprecedented spending comes massive risk. And this is the part of the story that has investors really on edge, worried that this whole thing might be built on a pretty shaky foundation.
The single biggest worry is something called the monetization gap. It's pretty simple. If companies like Amazon, Meta, and Microsoft don't start showing huge software profits from the hundreds of billions they're spending on hardware, and soon Wall Street is going to panic. The fear is that those massive orders will just dry up.
So the market's reaction isn't going to be about last quarter's numbers. No. It's going to hinge on one single metric, the forward guidance for the first quarter of fiscal year 2027. This one number is going to paint two very different futures for NVIDIA and really for the entire market.
And this slide lays out those two paths. Think of it like a fork in the road. In scenario A, NVIDIA guides revenue for next quarter above $74 billion. If that happens, the market sees it as proof the revolution is real and demand is accelerating. The stock probably smashes through its old highs. But in scenario B, if that guidance comes in light, let's say below $70 billion, it signals an earnings trap. The market will think big tech is finally slamming on the brakes, fear takes over, and that would likely send the stock into a pretty sharp correction.
So, with these two big scenarios on the table, what's the final verdict? What's the takeaway from all this data? How should you think about the outcome, no matter which way it breaks? Let's get to it.
Okay, now here is the really counterintuitive part that a lot of people miss. Despite the stock's absolutely massive run-up,
its valuation has actually gotten cheaper. Now, how is that even possible? Simple. Their earnings have grown even faster than their stock price has.
And this chart shows you exactly what that looks like. The forward price-to-earnings ratio, which is a way of looking at future expected earnings, has come way down from over 45 to a much more reasonable range, somewhere between 25 and 40. So, for new investors, this actually creates a more attractive entry point than they had even a year ago. And if we look beyond just this one report, the long-term trend still looks incredibly powerful. NVIDIA has already announced its next-generation Rubin architecture for later this year, and it's promising another massive five-fold leap in performance. All this suggests that we are still in the very early innings of a tech cycle that could last for decades.
So, the takeaway here boils down to two key interpretations. If scenario A, the revolution, plays out, the consensus view is to ride that momentum, but do it cautiously. If scenario B hits and we get that dip, many analysts actually see a pullback as a potential generational buying opportunity, because they believe that long-term story is still very much intact.
And that leaves us with this final thought. The AI era, without a doubt, is just beginning, and its potential seems almost limitless. But when a company is valued at nearly $4.5 trillion, the market demands nothing less than absolute perfection. There is simply zero margin for error.